This is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. President Trump announces a trade deal with Vietnam, slapping 20% tariffs on its exports while claiming zero duties for U.S. goods heading in. Meanwhile, Beijing braces for more U.S. trade deals aimed at shutting out China as Washington slaps a 40% tariff on goods transshipped via Vietnam. China's growing AI reach is raising concerns in the West after OpenAI warned that Beijing-backed firms such as Zhipu AI are becoming popular with governments around the world. Policy expert and former OpenAI board member Helen Toner will be joining us to break down how China's tech ambitions are reshaping the global tech race. And get ready for a sonic boom. Sega co-president Shuji Utsumi will be joining us to talk about reviving the legendary game maker, starting with a fresh spin on a super fast hedgehog. Welcome to Insight. President Trump says the U.S. has reached a trade deal with Vietnam, giving full market access to American companies while slapping a 20% tariff on all Vietnamese imports. This deal would be the third following framework agreements with the UK and China ahead of Trump's July 9th deadline. For more details on the deal, let's bring in Vietnam Bureau Chief Francesca Stevens. Francesca, well, 20% is lower than 46, but it's still very high. What do we know about this deal?
Yeah, that's right, Haslinda. Well, the call that everyone in Vietnam had been waiting for happened just after 9 p.m. local time last night, after which, as you said, we heard that there's a trade deal with Vietnam that will see a 20% tariff on Vietnamese exports to the U.S. and a 40% tariff on any goods deemed to be transshipped through the country. And in return, Vietnam agreed to drop all levies on U.S. imports, and that had actually been one of the opening offers from Tolam when the 46% tariff was first announced back in April. In a statement from the Vietnamese side last night, Lam also proposed that the US recognize Vietnam as a market economy and remove export restrictions on certain high-tech goods. Now, during weeks of intense diplomacy, Vietnam had repeatedly promised to purchase more American goods, including LNG and aircraft, so we might start to see some more details emerge from those kind of agreements. Multiple senior Vietnamese officials had flown to the US to rally support and sign deals over the last few weeks in a bid to show the US it was serious about addressing the trade imbalance, which Vietnam has one of the biggest trade surpluses with the US, and that's what partly made it such a prime tariff target. We're still waiting to see the full details of the agreement. Vietnam's cabinet is meeting this morning, and we may hear some more comments after that meeting.
Details few and far between. What are still missing? What's still in question?
Yeah, well, as you said, many details are still missing and many questions still outstanding. One business chamber told me this morning that assessing the pros and cons of this deal is really difficult at this stage without seeing any of those further details. And that's being echoed by many of the analysts my colleague Zhang has been speaking to, who are saying that the market needs more clarity on what goods and export sectors will be impacted. It's not clear how the higher 40% rate imposed on goods deemed to be transshipped that appears to target China will be enforced or enacted, and whether that's on all goods or specific sectors. China is Vietnam's largest trading partner, and Vietnam is heavily reliant on China for the raw essentials needed to maintain its manufacturing growth. So a big question now is what it means for Vietnam's trade relations with China. In fact, a Bloomberg economic analysis this morning says the deal risks provoking retaliatory steps from China. So Vietnam will really need to work out how best to continue to maintain strong relationships with both the US and China. Plenty of details still to come on this, and interesting times ahead for us in Vietnam for sure.
And Francesca, US cars are set to get preferential access. How significant is that?
I think it's really too early to say at this stage, Haslinda. I mean, that's one of the few details that was set out in the agreement. But like so many things, the terms of this are very vague. I wouldn't like to try and explain how that is going to play out when we're still, looking to see how much we can glean from this at this stage. And like I say, we do expect to see more details of this agreement emerge over the next few weeks, when we'll start to get a clearer picture of what that impact will really be.
Francesca, thank you so much for that perspective. Vietnam Bureau Chief Francesca Stevens there. Now, caution dominates trading here in Asia, even after news of the trade deal between the U.S. and Vietnam sent Wall Street to a fresh record high. Let's get more from Bloomberg MLive strategist Mary Nicola. Well, cautious here, but I don't know, perhaps euphoria in the U.S. They're looking at clarity. We're looking at what's going to happen to the rest of the trade deals with Asian countries.
Yeah, there was a lot of excitement overnight in equity markets in the U.S. And to be honest, from an Asia perspective, it really is hard to understand, because at the end of the day, we started this month at 10% tariffs, and now we're going into 20% for Vietnam. So does that set a new precedent? Is that a new bar for where levies are headed? And if that is the case, there's going to be a lot of nerves rippling through, because 10% you could arguably say was tolerable, but another 20%. And then, of course, what we're seeing with Vietnam, they're not addressing the sectoral tariffs, which has been some of the key issues and the key sticking points for the likes of Japan and Korea. So a lot of these issues that are still heavily involving the countries in the region aren't being ironed out. And of course, there's a lack of clarity still. And that, of course, is going to weigh on sentiment here in the region.
So you got to wonder how attractive Vietnam assets will be now that we have clarity. It's going to be imposed with 20% tariffs.
Yeah, I think obviously there's going to be a clear hit on the economy as a result of it. But we have to keep in mind that the U.S. is one of the largest trading partners with Vietnam. And of course, the impact of this 40% tariff on transshipped goods. Granted, there's a lack of understanding of how that'll be tracked, but at the same time, there is still going to be some, even if you ignore that transshipment part aside and putting that aside, you still have an impact because of how big and important the U.S. is as a trading partner for Vietnam.
And also China as a trading partner for Vietnam. You got to see what the response is from China.
Yeah, because that is clearly targeting China when they're putting an imposition of 40% transshipped. We know that a lot of China had moved a lot of its manufacturing into Vietnam, of course, because we saw higher labor costs in China. So that has been part of a long-term transition. So if it relies on China for inputs, etc., there is going to be a longer-term implication. So what China is worried now is this is clearly an attack, and so is there a risk of a retaliation?
And of course, still uncertainties when it comes to those trade deals, also uncertainties when it comes to developments in the UK, and of course, data coming out of the US this week.
Yeah, so I think if you look at the outlook and the headwinds coming through for bonds, there is plenty that you can think of. UK last night was a clear reminder of debt unsustainability and how fiscal unsustainability is still an issue.
That Liz Truss moment.
Absolutely. Then you also have the 30-year auction today for JGBs, and you saw the ripple effect that we had from the UK. Then, of course, you have the payroll numbers, and then there's the looming deadline of July 9. It's a very binary event, if you think about it. And so if we get an extension, or if we see it reverting back to April 2nd, that's clearly going to send shockwaves through the markets.
And of course, they say look out for the Treasuries market, yet when you take a look at stocks, at record highs. So, that disparity between the two asset classes. Thank you so much for that, Mary. Bloomberg MLive market strategist Mary Nicola there with that assessment. Now, still ahead this hour, we take a deep dive into the world of AI with Helen Toner, Georgetown CSET Director of Strategy and a former OpenAI board member. We'll tackle China's growing success in AI, as well as her views on how U.S. rivals are meeting that challenge. Keep it here with us. This is Bloomberg. Well, recently, China's AI momentum has dominated headlines. Zhipu AI is expanding into Southeast Asia, the Middle East. While DeepSeek and Minimax continue to roll out models they say rival American counterparts despite ongoing U.S. chip restrictions. OpenAI said in a blog post last week that state-backed Zhipu AI has made notable progress in getting several governments across the world to adopt its AI models. And the tech rivalry just saw a new development today. Siemens says the U.S. has lifted export curbs on chip-designed software for China, restoring access for Chinese clients. That move comes weeks after Washington had ordered electronic design automation firms to halt shipments, sparking backlash from Beijing. Our next guest is one of the most influential voices in global AI policy. Helen Toner is a former OpenAI board member and now director of strategy at Georgetown Center for Security and Emerging Technology, where she helps shape how governments and institutions respond to the rise of powerful AI systems. She joins us now from Washington. Helen, good to have you with us. First off,
great to be here.
OpenAI has been pretty open about, the impact of the likes of Shuji AI. I'm just wondering how much traction Chinese AI models are making right now.
They're certainly getting plenty of traction, and it's anyone's game. And an important thing to understand as well about how AI development is progressing is that there are really not just one AI competition or one AI race, as people sometimes say, but actually many. So there's a question of who is leading at the very cutting edge of the technology, making the most advanced models. There's different questions about who is leading in terms of adoption, in terms of B2B use cases, B2C use cases in different countries. And we're seeing Chinese companies certainly making a strong showing across many of those fields, even if I would say that the US is still generally in the lead.
So, but how quickly, though, are Chinese companies eroding China's leadership, or rather U.S. leadership?
It really depends on where you look. So I think if you're looking at adoption across enterprise, then certainly in China, Chinese models have obviously a big advantage. Most of the U.S. companies are not even attempting to go for Chinese adoption. On the flip side, if we're looking at U.S. adoption, corporate adoption, customer adoption, then the U.S. companies have a natural advantage there. Something that OpenAI said about Zhipu in their blog post recently was that Zhipu was really trying to make a play for those third countries. So OpenAI has been on a big spree going across Southeast Asia and other countries, looking to sell their products, looking to set up what they call OpenAI for Countries initiatives, so partnering with specific governments. And what it sounds like is they have heard from those governments as they've been touring the area that Zhipu, this Chinese company, one of the Chinese 6 little dragons, it gets called, that they're also going and having those conversations with governments, trying to come in and say, look, we can give you a full stack solution. We can, give you white glove service to get not just, a specific, broad-based product, but get something specific to your needs. And so what it sounds like is that Zhipu as a company, in addition to other companies that we know from the Chinese side are trying to do this, like Alibaba, Huawei, that they are starting to show up in these conversations as well.
We know that China and the U.S. approach AI development very differently. When it comes to the Chinese model is open source, they're using cheaper chips. I'm wondering whether that would put a lot of pressure now on the likes of OpenAI to adopt a similar model.
Yeah, there's different pieces to this. So one piece where I think there really is pressure is in this open source question. So this is a lot of the leading US developers, in particular OpenAI and their 2 biggest competitors, Google and Anthropic. They've really led with what get called closed models, meaning that they're proprietary, only the company has access to their models and they can sell access to that via an API or via a product like ChatGPT, without giving the actual AI model away. Whereas other companies, notably DeepSeek, but also other US companies like Meta, are giving away their actual AI models. So this is the open source approach. And for plenty of users, open source is really appealing, both because you have full control of the model itself. You can modify it in any way you choose. You can be confident that you will always have access to that model. The company can't roll it back or change it or change the pricing on you. It's really in your hands. And so it's been really interesting to watch. Google for a while has been offering an open source model that is less capable than its most advanced models. And recently, OpenAI announced that they're actually also going to, for the first time in a long time, make an open source model available that is one of these so-called large language models or multimodal models. They haven't open sourced a model like that in a very long time. And so that shows that they're really feeling the heat and feeling the pressure to provide an offering in that slice of the market. Now, that will not necessarily be competitive with the very best models from the very leading companies. Instead, what you often see with competitive open source models is that they are smaller. They're designed to be easier to use, easier to put on devices, as opposed to some of the very most advanced models that are available, which will often need multiple leading edge chips. You need to have your own server rack to be able to run them at all, which makes them less accessible. Even if they were open sourced, many people wouldn't be able to use them. So we're really seeing some fierce competition in that sector.
Helen, talk to us about, the companies already adopting the Chinese AI models, because we hear, the adoption is pretty much throughout the world, including the Middle East, Asia, and Europe as well.
So what we're seeing, I think, is a lot of experimentation. It's difficult to know how much actual adoption and how much at-scale use that we're seeing. So, for example, in China, in the wake of this big DeepSeek moment in January, where that company really broke through and had a huge news cycle, there were a lot of stories about Chinese companies, Chinese local and provincial governments starting to adopt DeepSeek. But it's really not clear if you kind of scratch beneath the surface, what does that look like? Does it look like they ran one trial? Does it look like some of their employees started using the app? Or did it really look like a deep partnership and really serious adoption? It's very difficult to get that in-depth data. One thing we can say is that if you look at, again, these open source models, actually a really big player there is Alibaba. So they have a model series called Qwen, and that is very, very popular. So even on US platforms or international platforms like Hugging Face is a very popular place to go to find AI models to use. They are showing that Alibaba's models are really very popular, outstripping any of the US models in terms of just sheer amount of use on that particular platform. But it's difficult to make really sweeping statements. What we can say as well is on the consumer side, OpenAI does continue to dominate. So ChatGPT is up there in the many hundreds of millions of users, which really far outstrips any other competitors.
What are the possible longer-term implications of what we're seeing right now? People often talk about perhaps a decoupling of technology and AI models perhaps in the longer term. What might that mean for the world?
So we've really seen a lot of, technology companies are the place where the US and China are the most decoupled and have been for a long time, right? So Google hasn't been in China for 15 years at this point. The same is true for many of the US's other leading technology companies. And in some ways, that has been what has made space for China's tech sector to grow and flourish, is that they haven't actually, unlike most other countries in the world, tech companies there haven't had to compete with their US counterparts. But now what we're seeing is with this new wave of AI companies, there was maybe a moment where it looked like there could be more interconnection. And certainly at the basic science level, there's a lot of interconnection between the US and Chinese ecosystem, with researchers collaborating, US and Chinese institutions collaborating, people moving across borders all the time. But what we've seen at the company level and at the product level is actually that continued decoupling. So I think it's a pretty safe bet that is going to continue to be the case. And then the question is really what happens again in these third countries. China has a long history of pushing it, it calls its digital Silk Road, meaning going out there to countries in Southeast Asia, Central Asia, Sub-Saharan Africa, and saying, look, we can work with your governments. We can help you build smart cities, which involves, surveillance systems and, digital infrastructure for governments. That is something they've been doing for a long time at this point, and AI is sort of a natural continuation of that. But it remains to be seen exactly how far that goes and how well they're able to compete with U.S. offerings. But it's, certainly a strong showing they're making.
Is it fair to deduce, though, at this stage that the U.S. will have less influence in how AI can be used or how it should be used, given that China's, role in it is increasing?
Yeah, the U.S. certainly doesn't have a monopoly on this. And something that we'll, I think, likely see from China is that if you look at the way that China is regulating and governing these models, a huge concern for the Chinese government, of course, is social control, censorship, the ability to make sure that AI models are not doing anything the Chinese government wouldn't like. And that's not something that the U.S. government is, going to be actively promoting among U.S. companies. It's not something U.S. companies will expect their customers to want. But of course, there are many governments around the world that would love to be able to make use of good tools for ensuring that AI systems don't criticize the government or don't venture into taboo topics. So I think at a minimum, that's an area where we should automatically expect China to be competitive. And certainly if they continue to make their models available, even if they're perhaps slightly less technically sophisticated, but if they're cheaper, if they're easier to use, if they're coming with this push to help you adopt and help customize for your use case, then that will certainly be a place that China can compete.
Cheaper, easier to use, making them more accessible. I'm just wondering whether that raises the question of whether or not China can then use its AI models to spread its own interests, its own information. Is there reason to be concerned about that?
This is a huge question. So you definitely hear this a lot as a potential reason for concern is, do these models embody certain values? Would it be strategically advantageous for the United States to have models that embody U.S. values spread throughout the world? I think it's a little bit of an open question once you dig into it, because in so many ways, often the AI models in question are very customizable, and it's very easy to kind of get rid of, if it's a Chinese model with censorship built in, it's usually pretty easy to get rid of that censorship. Likewise, if it's a U.S. model that has some U.S. values built in, it may not be that difficult to actually customize it and get rid of that if it's not what you want for your use case. So I think as a starting point, certainly there's a large financial interest, and from there a competitive interest in wanting to make sure that U.S. companies are earning revenue and are setting the standard internationally. I think in terms of these questions around sort of values or whose models are being used, the exact strategic implications are still becoming clear.
Helen, the AI space is developing so rapidly. In 3 to 5 years, how do you see that space shaping up?
So the really interesting thing working in AI is no one knows. And what I mean by that is different experts have incredibly different perspectives on what we're going to see. Some experts think that the paradigm that we are in right now of scaling up large language models, starting to take these chatbots and add on new capabilities like what gets called reasoning. So this is working step by step through complicated problems, or adding on the ability to build agents. So this is AI systems that aren't just chatbots that chat with you in a window, but are actually able to go out there and take actions in the digital world. Some experts think that that combination of capabilities, so large language models plus more reasoning plus more agency or agentic capabilities, that could get really far and could get to something approaching or exceeding artificial general intelligence, which is a term people use to mean roughly human level intelligence. Other experts think that is all absolute nonsense, and that the AI systems we're building today are very far from that and have deep limitations that they're never going to be able to exceed unless we totally change the paradigm that we're working in. So often my view, I'm sitting here in Washington, D.C. as a policy analyst, and so often I am thinking in terms of how do we make policy or prepare for the possibility that any of these different worlds could come true.
But Helen, hang tight. Yeah. Helen Toner, Director of Strategy at Georgetown Center for Security and Emerging Technology, and former OpenAI bot member, is staying with us. Keep it here with us. This is Bloomberg. You're watching Insight. Bloomberg has learned OpenAI has agreed to rent a massive 4.5 gigawatts of data center power from Oracle as part of its Stargate initiative. To give a sense of the scale involved, 1 gigawatt is about the capacity of a nuclear reactor, enough to provide electricity for 750,000 homes. And Oracle, which has so far developed one large data center in Texas for OpenAI, is said to be working on multiple other sites across the U.S. This underscores the massive developmental challenges facing OpenAI, Oracle, and SoftBank after announcing the $500 billion Stargate project earlier this year. Meanwhile, the race for top AI talent is heating up in the U.S., with Meta targeting staff from OpenAI and others to assemble a new team pursuing AI superintelligence. Meta CEO Mark Zuckerberg's new Meta Superintelligence Labs includes 4 notable OpenAI researchers and scientists, as well as others from Anthropic and Google. OpenAI CEO Sam Altman speaking on a podcast last month before the hires were reported, claimed Meta was offering his employees signing bonuses as high as $100 million. Now, Helen Toner from Georgetown Center for Security and Emerging Technology is back with us. Helen, talk about this, I guess, the fight for talent.
The talent fight in AI goes back a long way and is incredibly fierce. So for the past 5 or 10 years, certainly in the last couple of years since ChatGPT really heated things up, access to the top researchers and top engineers has been one of the biggest determining factors in which companies are able to build the best AI models, build the best products. And so it's very common for these companies to be poaching talent from each other. That happens all the time. But what we're really seeing here with Meta is Meta has started to get a reputation of having a little bit of a dysfunctional AI team, not really having its organizational structure set up in a way that really lets them succeed and innovate. And what I think we're seeing here is CEO Mark Zuckerberg really stepping in and saying, wow, we have to do something differently. We need a big new push. We need a big new effort. And so those signing bonuses and salary packages are pretty eye-popping. But it is a continuation of a new peak of a trend that has been going on for a little while.
But you got to wonder, those hundreds of millions of dollars, how sustainable that is, even though there is a fierce talent war. For OpenAI, Helen, I'm just wondering, what does it mean for its future AI breakthroughs and strategy going forward?
Yeah, I think, again, losing a few people is not actually that unusual. These companies are constantly pulling people, in both directions. So OpenAI would be hiring people from Meta constantly, from Google, from Anthropic, and vice versa. So I think the real question, I think this will not be anything super unusual for OpenAI as a company. The real question is, can it turn around Meta's fortunes, and can it turn Meta into a real juggernaut? Because one way that the DeepSeek moment in January, where they seemingly came out of nowhere for people who hadn't been watching the Chinese AI ecosystem, the company that looked worst for, I would say, was Meta, because Meta had really been making a strategy of not being the very first, not having the very most advanced models, but being the first at that open source level, being the first one to say, here, we're just going to give away our technology for free. And the fact that DeepSeek was actually really outshining them there was really not a good look for the company. So I think they're really trying to start something new, to obviously pour enormous amounts of financial resources into that. And so the question of 6 months from now, 12 months from now, is that paying off for them is the one to watch.
So what's the sense you're getting? Can it turn around? How quickly can it?
It'll be difficult. I mean, I think there's a lot of organizational politics at play. A researcher who I really respect was talking about how a big challenge for the kind of AI development that you need to do right now is not just pouring in resources, but also telling people no, telling people, okay, you spent 6 months of your life working on this. You want to have your name on it. You want your thing to be in the product that gets released. But actually, it'll be a better product if we leave your part out. And so that takes a lot of willingness to, stare down powerful people inside your company who you maybe don't want to lose, and tell them that you actually don't want them to do what they want. And so I think the question will be, in part, can Mark Zuckerberg, if this is his big personal project, is that enough to really change their organizational dynamics? And can they also make progress fast enough that top talent that they've just recruited is willing to stay? Because they will be getting, they will be getting attempts to poach them back to other companies starting on day one. So it's really a question of whether Meta can convince them that they're moving fast enough.
Helen, we know that OpenAI dropped plans to go for profit. How do you think this will play out?
It's been a fascinating thing to watch. They have had a very strange structure from the beginning. They started out as a fully nonprofit organization, and then in 2019 restructured to be a capped profit company, meaning that investors could receive up to 100x of their investment back, and everything beyond that went to the nonprofit. Very unusual, bespoke structure. And I think they've been trying for a number of years to see, can they get into a little bit more of a standard structure again? The problem is they have a bunch of legal obligations and commitments due to the fact that they set themselves up as a nonprofit. What they're now saying is they're going to try to move to a public benefit corporation structure where the nonprofit would still be in charge, but they haven't quite said yet what exactly it would mean for the nonprofit to be in charge of that PBC. And they're really still going to need the approval of 2 attorneys general in the US. So, they're located in California, they're incorporated in Delaware. And so both of those attorneys general have indicated that they're taking a close look at the restructure. So I think it's going to be difficult for them to maybe change their structure as much as they would like to. But I'm sure they're working hard and creatively to try and find a good solution.
Even as they're looking to grow and turn around, it's being settled by a lot of legal battles. Is that sucking too much oxygen from the company that it is getting distracted from its strategy?
So not being, inside the leadership team, I'm not able to say exactly how much oxygen is taking up. I'm sure they would rather not have that be on their plate. I will say that they are still releasing some very impressive products. So I think their O3 model is generally considered to be the best AI system in the world today. That was first announced in December, and it has been, released and rolled out more widely over the past few months. Of course, in this industry, there's always a competitor nipping at your heels, and in OpenAI's case, the two main competitors there, Anthropic and Google, who have also been releasing lots and lots of models. So they seem to be hanging in there pretty well so far, but we'll see how long that continues for.
It is also a company that has internal rift. How might that play out, and how much pressure is that putting on the company? Yeah,
it's, again, a little hard to say from the outside. There's certainly a lot of turnover last year. So in 2024, they lost a large number of their researchers and talent, including a number of people focused on safety and governance questions, but also some of their leadership team. So Mira Murati, the CTO, Bob McGrew, who is, I believe, head of research. So they lost a good chunk of talent in 2024. Again, so far they've had a great 2025, so maybe it's not causing them too much pain. It's a little hard to be sure.
Helen, not to bring up the past, but you've criticized Sam Altman. I'm just wondering whether you've made peace with Altman on the back of that drama.
So we haven't actually interacted since the time. I'm sure at some point soon we'll end up at the same event, and the AI world is pretty small, and I'm sure that we'll both be happy to shake each other's hand. But no, haven't had a chance yet so far.
Do the concerns remain, even though you're no longer a board member at OpenAI?
I mean, I think I've said what I want to say about this topic, and I'm not the only person who's raised some of the kind of concerns that we talked about at the time.
Helen, appreciate your insights today. Thank you so much for joining us. Helen Toner, former OpenAI board member and now director of strategy at Georgetown Center for Security and Emerging Technology. Now, we're breaking news right here in Japan. The results of a 30-year bond auction are out. It's a key test of policymakers' success in quelling debt market turmoil. Avril Hong has been all over that. Avril Hong, tell us more.
Yeah, in the past 2 minutes, we've been getting the results of that 30-year bond auction. It's really remarkable. I mean, we were expecting some sort of improvement following the bid-to-cover ratio coming in at about 2.9 last month. This is the higher level than not just the 3 ratio, but also higher than the 12-month average. So I'd say it's a pretty solid result for Japanese JGBs on the long end. And we already had some signs ahead of this that the likes of MUFG would be buying up these long end bonds. But certainly to your point about this being a key test of policymakers' success in able to dwell or to quell what we're seeing in the bond markets, they've been reducing the issuance on the long end. Don't forget the BOJ had also been slowing its pullback from the debt market. So those efforts seem to be paying off. Let's take a look at what's happening in the secondary bond market as well. As we saw JGBs today coming under pressure, really tricky timing for this auction because of the pressure on the long end in gilt overnight. It looks like this result from the 30-year auction is providing a bit of a reprieve on the longer end of things, though not by much. It's not quite out of the woods here when it comes to Japan. Think about how government fundraising is still going to be in focus ahead of the elections later this month, where there have already been really big pledges when it comes to spending. Now, flip the board again. Interesting dynamic. I just put in some context for you as well. Take a look at this chart because it will show you that after May, remember when that 20-year auction disastrous led to a spike? If we can take a look at the chart, the spike in JGB yields and how that kind of trickled through into other global debt markets. MLife's Mark Cranfield is making the point that the weak link now seems to be the UK. We saw a 20 basis point move on the long end gilts, concerns about the future of the UK Chancellor, as well as the government's commitment to reining in its finances. And that actually also trickled through into treasuries. All this as Trump's signature tax bill is making its way through the House ahead of a US jobs report report the continued concerns about the long end.
That's right. It's not just about the 30-year JGBs. It's all super long bonds under a lot of scrutiny because of those deficits. Avril Hong, thank you so much for that. Now, still to come, we head to IVS 2025 in Kyoto for a conversation with Sega's president and COO Shuji Utsumi and his work revitalizing the venerable gaming company. You don't want to miss this conversation. Keep it here with us. This is Bloomberg.
This Tokyo Stock Exchange market reform will help founders build more into the bigger scale. We expect a lot of investment coming from international investor into Japanese startup more.
Especially in Korea, focused on international development very early on, which is why actually Korea today has more unicorns than Japan.
Obviously, Japan, as of today, the overall market size is definitely still kind of small, but it's really evolving and over time in 10 years.
And this ecosystem simply didn't exist 20 years ago. And so we think that Japan is finally coming of its age in terms of having a real startup economy.
Some of our guests sharing their insights on the Japanese economy at the startup conference IVS in Kyoto. Well, our next guest says he wants to revive the legacy of Japanese gaming giant Sega. The company has seen a resurgence in recent years thanks in part to Sonic the Hedgehog. The movie trilogy based on the video game icon is a certified Hollywood blockbuster, zooming past $1 billion at the global box office. A fourth movie is also in the works, with Sega's licensing revenue nearly tripling in the past 4 years, and its shares having doubled since the first entry hit theaters in 2020. Despite its recent film successes, Sega still hasn't released a new video game console since the Dreamcast in November 1998. Let's bring in Shuji Utsumi, President and COO at Sega Corporation. He's also CEO for Sega, and he joins us now. Shuji-san, thank you for joining us. We know that you have such an accomplished career already. But now you say that the greatest achievement would be a revival of Sega. How does that look like?
Well, because Sega is such an amazing company, having a lot of legacies, brand, and the Sega is a brand that gamers need to love. I found that this kind of legacy, so I'm really excited to be part of Sega now again.
But how do you intend to revive Sega? What's the plan? What is the strategy? And what kind of time frame are you looking at?
Well, actually, I joined Sega roughly 5 years ago. So the first step was to really making a so we call pillar, including Sonic, bigger and bigger. And then during the time that I joined Sega, Sega was focusing more in the Japanese domestic market. And then, I kind of changed the shift of the focus to the global market, including, and we are also paying too much attention to console. Now we are paying attention to console, PC, and also mobile, and then the global market. That's the first step. And also we are introducing a kind of concept of a transmedia kind of license program. That's been working very well too. And the third step, which is going to be next 2-3 years, we are reviving our old IPs, legacy IPs. So it's like a new for Sega's current business. So that's kind of additional revenue growth. And in the area of gas business, we are making global also. So these are our kind of plan in 3 to 5 years.
So as you look to making Sega global, what are the key challenges you're facing?
Well, key challenge was that our developers, first of all, we didn't really have that kind of mindset that the market is the global market. I mean, we are paying too much attention to the local market. But obviously, the market, turning out to be really global. So that's a kind of education of the developer was the first step. And also a second step is going to be, publishing side, where, let's say SNS marketing is changing dramatically. So we are trying to be catching up all that kind of trend also too.
As you look to the future, how important is mobile in your future?
Yeah, mobile is very important because the mobile business represents more than half of the game business as of now, and it's going to be growing also, growing more compared to the rest of the platform. So it's definitely a very important market for us.
So how are you mulling over looking at the likes of VR, AR, and the other platforms?
Yeah, of course. I mean, as a portfolio, we are putting some allocation to VR side, but the mobile definitely is going to be very important market. So we are somehow utilizing, let's say, Sonic for the mobile market, and also as you remember, we acquired a company, Rovio. So Angry Bird is going to be very important asset for us to explore a mobile market.
Shuji, as you look to make Sega a global player, I'm just wondering whether, in the end, though, the primary markets, your primary strength still remains in Asia, or do you see that pivoting to the West?
Yeah, I mean, luckily, Sega is a big name. I mean, actually a popular name among the West. And then, thankfully, I mean, Sega has a really great, brand context among Western, actually, people. As a matter of fact, it's more challenge for us to really explore Asia market, including China. So we are partnering with the Chinese partner right now and exploring that market. I mean, working with the key partners. And talking about Southeast Asia, we are selecting really good partners in each country. And then I think the progress is pretty good.
You have a big attachment to console, and Nintendo, of course, has a huge role in that. I'm just wondering how you're assessing how Nintendo is doing.
Well, Nintendo is an amazing player. We respect Nintendo a lot. But at the same time, I mean, the rest of the format, as you said, I mean, mobile is growing, and also PC is growing. So now we need to pay attention to every kind of aspect of the platform. But saying so, getting back, I mean, Nintendo is just an amazing company that, gamers, family love, Nintendo, gamers love Nintendo. So when
you take a look at the company, though, when you take a look at Nintendo, though, what do you see as the strengths and the weaknesses?
Well, strengths is, obviously their brand, and also including, and also their, IPs. I mean, for example, Pokemon is a part of a Nintendo family. Now the Pokemon mobile game right now ranked #1 in the world. So that's one of the kind of, showing the potential of Nintendo. But at the same time, Nintendo is pretty much somehow currently sticking to hardware, which can be strengths and can be weakness, because the technology trend is just, moving really so fast, like AI.
Nintendo launched recently the Switch 2, record-breaking sales. What do you think of it?
Yeah. I mean, sales expectation is actually better than we expected. So actually, market expected also too. So we're really, impressed how they launch the hardware, and I hope that trend is going to continue because we are providing a lot of products on Switch 2 platform also.
Nintendo was pretty conservative when it came to its guidance. What's your own take on the outlook for Nintendo and Switch 2 going forward?
Well, as a third-party company, we just really work closely with them and then support them to make that platform grow. At the same time, again, we work with a bunch of other platformers. So Nintendo has been doing an amazing job, and then actually getting back, Switch 1 was much bigger than their success was much bigger than we expected. So you can count. You can just we can take really light of them. That's my thought.
Shuji, before we let you go, give us a sense of what you're most excited about the industry. What's coming up that excites you?
Well, game industry has been growing with the evolution of technology, and is new technology trend is coming. Yes, it's coming, including AI. So game industry is really good at coping with evolution. So I'm really excited to see how industry is going to go, with this big trend of technology.
Shuji-san, thank you so much for joining us. It's been a pleasure. Shuji Utsumi, President and COO at Sega Corporation and CEO for Sega America as well as Sega Europe. Now, before we go, here's a look at our show tomorrow. The Stock Exchange of Thailand's President Asidej Kongssiri will be joining us to discuss the nation's capital markets amid a deepening political crisis. Plus, Goldman Sachs senior economist Kevin Daly will be here for a deep dive into global economic trends. That is it for Insight. Horizons and Middle East Africa is next. Keep it here with us. This is Bloomberg.